Mark, it's great to have you. We've been trying to put together some narrative threads in advance of the chair tomorrow. And one that we came up with is just trying to convince the market that 50 is not child's play. You agree?
Yeah, I do. I mean, I actually took a lot of solace in what President Harker said. I think that's exactly what they should be doing. 50 basis points in September. I think they've articulated a quarter point in November, quarter point in December. That would put the federal funds rate target at 3.5%. The so-called R-star equilibrium or neutral rate is 2.5%, so that's restrictive. You got to see what that does to the economy. It takes a bit of time before the rate hikes actually translate into economic activity, and see how that goes. So that sounds like a pretty good script to me. That's the script I think they've been articulating, and it feels like they're going to stick to it, and I think the market should take some solace in that. That feels really exactly what they should be doing.
Right. I know you've been watching housing, and it's been a crazy week for some of these reports pending, among the worst reads in history, new second worst read in history. How do we have those kinds of reports and yet have Esther George say that supply imbalances are still out of whack?
Well, I mean, those are pretty big declines in housing activity. Actually surprised me how quickly and significantly home sales have come down. But, you know, Carl, this is also part of the script, right? I mean, the Fed wants to slow growth. The housing market is, through higher interest rates, the housing market is the most rate-sensitive sector of the economy. So, you know, it's not at all surprising that we see weaker housing activity, although I will say the decline in home sales has been much sharper than anticipated. And as such, I do think the housing recession will probably end up being more severe. We haven't seen it show up in house prices yet. We haven't seen that prices roll over. But I suspect that over the next few months, certainly as we make our way into next year, we'll see some meaningful price declines in many parts of the country.
Right. So as we then start looking ahead to secondary effects, I know Goldman had a note out yesterday that the reduction in labor demand that is needed is already underway, they said. Companies that have announced either a layoff, a hiring freeze, or a slowdown in hiring have cut their job listings by 40% in recent months. Do you think we're going to wind up, come year end, with some pretty soft NFP reads?
Yeah, I do. You know, I think it's already starting to happen. The businesses are growing more cautious. You know, those unfilled positions, a little over 10 million, it's still very high, but they feel like soft unfilled positions. I mean, speaking to you as a business person now, hiring lots of people all over the world, we've got open positions, but we are filling them much more slowly than we otherwise would have, say, 12 months ago when we were in a different place with the economy and the way things are going. So it feels like the labor market is starting to ease up here. And, you know, by the end of the year, as we make our way into next year, I would expect that the gains in employment will be well south of 100K per month. We might even get a negative month or two in there as well. And we'll see much softer job numbers dead ahead.
Will that mean people will stop working from home? And I wonder, people working from home, as you seem to be, I mean, do you think that's affecting productivity? Do you think that's affecting productivity at all, Mark?
So, David, are you referring to my dogs that are barking? Can you hear that? I apologize.
No, I can't hear the dogs. I can't hear the dogs.
In my view, I think remote work is here to stay. I think it's a game changer. It's going to ebb and it's going to flow, and it's ebbing a little bit now, but I think it's here to stay. And I think ultimately it's going to be productivity enhancing. I do think that, you know, as technology improves and we get better at this, that'll result in productivity gains. And I think, you know, new companies, when they form, they're not going to optimize. They're not going to form and optimize around an office space or cubes. They're going to optimize around remote work. And as they do, we'll see those productivity gains, you know, more clearly in the data. We need more data points here, obviously. The debate is raging. But I would be surprised if, you know, 5-10 years from now, we don't look back and we don't see some productivity gains because of remote work.
Interesting. I mean, you know, it's such an important topic in terms of the way we work and the seminal changes that have taken place in the last 2 years. More to the point, though, on just overall employment, I think you may have heard President Harker talk about the need for perhaps more immigration. Legal is what he certainly said he wants. But, you know, where are you in terms of the actual available workforce? And do you agree with those comments if you happen to hear them?
Yeah, totally agree. We rely very heavily on immigration, not only for growth in the labor force, but also in terms of productivity growth. I mean, immigrants start companies at a much higher rate. By definition, they're risk takers. You don't pick up and leave one country and come to another unless you're willing to take risk. And they are key to technological innovation and growth. So we need more immigrants. And this is a real problem. If you go back, before the Trump administration, we were getting about 1 million immigrants a year. By my estimate, we were down to about 250K last year. And that's one reason why labor markets are as tight as they are and why there are so many issues with the labor supply disruptions. So we need more immigrants, and we need a lot more of them going forward. We rely on that very heavily in terms of labor supply, innovation, and ultimately economic growth.